Hey everybody, this is the House of Shade, and today's episode is hosted by Red-Eyed Bear, who's joined by core Shade contributors Kyle Wahlberg, Sbeem, and Carter Woetzel. In today's episode, we learn about one of Shade Protocol's newest primitives, Shade Bonds. First, we learn what a bond is and how Shade will utilize them. Then we dive into the structure and role of governance in shaping Shade's primitives, discuss the importance of prioritizing end-user security and safety, and expand on the current proposed bond models, including discussion around the role of treasury and the time horizon for bootstrapping liquidity. And finally, we close out the show with the Little Silk Alpha. But before we jump right in and join Red-Eyed Bear, I want to talk about the Shade Warrior program. Shade Warriors are only as strong as the warrior standing next to them. You can join the warrior ranks and help Shade Protocol bring privacy to DeFi. By completing missions, you'll earn points, rewards, tokens, and gain exclusive access as you move up the ranks. If you're ready to earn your shield, click the Shade Discord link in the description for early access. Now let's join Red-Eyed Bear for his discussion on Shade Bonds.
Three, two, one. All right, and we're live. Thank you guys for joining me today. We've got some new and familiar faces here on the podcast today. We're joined by Kyle, Carter, and Sbeem today. Sbeem and Carter have been on the podcast before to talk about various things. Sbeem talking about Shadeland and Carter talking about staking derivatives and tokenomics. But we're joined by Kyle today for the first time to talk about today's topic, which is Shade Bonds. Super excited about this, guys. And this is like the perfect day to do it because the Twitter spaces with the bonds, this is like fresh in all of our minds. So the ideas are already flowing. So this is a perfect day to talk about Shade Bonds in a little bit more in depth.
Maybe we can do just a quick introduction, Kyle, just to the community. And just because,
Sure.
Christian and me, we've been on the podcast, so here's kind of your chance.
Yeah.
Sure thing. I'm Kyle Wahlberg. I've been a part of the Dev Monthly live streams before, so maybe you've seen me there. I've been working as one of the back-end smart contract developers for Shade Protocol for several months now. I've really been enjoying it, and the latest contribution to this wonderful suite of applications that we're making is the bonds contract that is coming to the community very soon. So excited to be a part of it and excited to talk about it.
Currently under audit.
That's awesome. Yeah, I know. I feel like the last couple dev panels we had, you were just holding back some information that you were just like itching to share, and we're finally getting to take a look at it.
Yeah. Glad to talk about it after the announce at Decentral Austin, that's for sure.
Yeah, which was phenomenal. I really enjoyed getting to meet all of you guys, getting to meet the team, see not only Shade Protocol out in full force, but Secret Network out in full force. It was a really good showing, I think, for our communities, and the privacy narrative was definitely realized and recognized while we were there. So that was really encouraging from a community member standpoint, and I'm sure also from a team standpoint, like a developer standpoint. So as far as bonds are concerned, I was aware of what bonds were in like a traditional finance sense, like the instrument they are in traditional finance, but I had never heard of bonds being utilized in DeFi prior to Shade taking an interest in developing this primitive. I don't necessarily think I'm your average crypto user. I'm pretty safe and like pretty reserved when it comes to like my DeFi yield searching. But as soon as I started learning about this, my interest really started peaking, especially now that we have this idea of Shade Swap being a primitive as well. These ideas are starting to make a lot more sense to me. So I think to start this off, can you guys briefly describe effectively what bonds are?
Sure. I can start with like what a bond is, and then maybe Kyle, you can talk about the different types of bonds on the treasury.
Sure.
So like essentially what a bond is in crypto is it's like a bootstrapping mechanism for the treasury where it's able to sell something of value to the market at a rate that's lucrative enough that users, deposit their assets. The treasury now owns those assets into perpetuity, And after a certain vesting length, the user is then able to claim that value that the treasury is giving up. And so it's kind of a win-win. The user is able to, kind of arb the position and earn profit from it, assuming that the value they're going to receive doesn't decrease during the vesting period below like a profitability point. And then the treasury wins because it receives kind of uncorrelated assets. So it's definitely more of a kind of speculative tool compared to something like staking, but there's still a very distinct set of like risk profiles and users that like bonds and want to contribute to bootstrapping and all of that. Now I'll leave it to Kyle here to kind of describe the different types of bonds.
Yeah, so it's a powerful tool for the Shade DAO, as Carter was just describing, and for the users, it's powerful because it's an opportunity to buy assets like Shade at a discount. As they deposit whatever asset the treasury is asking for into the bond opportunity and they go into that vesting period, they know that at the end of that vesting period, they're going to get their returned asset, usually Shade, right out of the gate, at a pretty good discount. And not only are we going to be able to offer Shade bonds, where we're minting new Shade, it's entering the ecosystem where it previously wasn't there before, which is wonderful because people are looking for more Shade, which is great. But the treasury can also use bonds as a tool to offer whatever assets it wants to. It interacts with SNP20s that are currently a part of Secret Network. And by taking SNP20s that the treasury itself is holding and putting them out there as the issued asset within a bond opportunity, it lets users get their hands on a lot of different things. And again, it's just powerful tools for the Shade DAO, and as a result, super powerful tools for the protocol. And it's a win-win for all the users that get involved in the opportunities as well.
Yeah, and I think the user story that's super exciting is like, there could be a situation where the treasury is like, yeah, I actually want to sell the atom that we're holding to the open market in the form of a bond because we want to take a different asset. I think that's like really fascinating to think about. And then the other type of bond I think will be super cool is once the treasury has Silk on it that's been economically accounted for. So not just like Silk minted out of thin air, like Silk that, it's been accounted for within the system. It's been bought with real value. You could issue a Silk bond. And then during that vesting period, you don't have to worry about the volatility. You're almost like guaranteed a return if you're selling the Silk at a discounted rate. And so there's like interesting potential there in the long haul. And yeah, Kyle did a great job of kind of walking through how the treasury thinks about it. And yeah.
Mm-hmm. Yeah, and honestly, when you were talking about sort of this flexibility that bonds will have with like what can be issued, or I guess like what can be accepted and what can be given in return. My mind immediately went to thinking about Silk and like thinking about the treasury trying to acquire Silk, like taking it off the market and potentially, not swapping, but like trading, its assets it holds on its balance sheet effectively, which is really cool. So that seems like another really nice stability mechanism that's going to be built into not only helping Silk, maintain its peg, but also making sure that the markets are like, that there's plenty of liquidity and like a fluid balance of where Silk is going, what can be used to help spread it and also kind of remove it from the market. So
Yes. If we consider it like within the Silk documentation that's going to be released pretty soon, bonds is like a stability mechanism, but it's like a stability mechanism I think of like more so last resort. Mm-hmm. Like I don't think you want like bonds expanding supply or shrinking supply like first and foremost. That's like other options. Yeah. All the other stability mechanisms aren't working, and then bonds kind of step into the market, similar to how bond markets work in legacy finance. But the goal in crypto is, I would say, like try to avoid it, but it's a tool in the toolbox. And I think our theory has always been have as many stability tools available to us. And then it's about navigating and exploring the balance between all those available tools. And bonds are one of them.
So from an end user perspective, what are the main pros and cons with choosing to acquire Shade through a bond versus buying it on the open market? Obviously, there is the potential for a discount, but that comes with obviously some risks effectively. So just wondering if you guys could touch on some of those risks that are associated with acquiring Shade or some other asset through bonds, and then what are the pros that are associated with it as well. Because obviously there's got to be some good things if people are going to be interacting with it or choosing to interact with it.
Yeah, Kyle, ask me if either you want to comment on this one. Yeah.
Yeah, can speak to a pro first and foremost, and that's by not going through a pool and instead going through a bond opportunity, you don't have to deal with slippage in the same way. Instead, it is just that targeted sale at that price, the whole quantity of shade or whatever asset you're purchasing through the bond opportunity, that's locked up with that sale price and that discount as soon as you start that opportunity. And then throughout that vesting period, it's like how much you're going to get at the end of it. And so not dealing with slippage is a huge plus. Granted, though, that does include just the risk that the vesting period causes, right? So as part of deploying bonds, we're also going to have bond opportunities with different risk profiles in regards to how much time you are locked up for, right? How long that vesting period is, and also how heavy the discount is, what asset is being offered. There's going to be a lot of special care and attention paid to both what assets are being offered, what assets are being accepted, and then also just exactly what those parameters are in terms of vesting period and as well as discount. Because ultimately it's all supposed to benefit the protocol and the Shade DAO while also benefiting the end user, and nobody's trying to screw over anybody with it. So a lot of care is going to be given to that, that's for sure.
Yep. And I think it's worth at some point talking about the risk parameters that are in place too, because there's been a lot of thought that's gone into ceiling floor. And so we'll definitely want to dive into that. I'll let Sbeem too, if you have anything you want to add on that front with the kind of the risks of a bond versus a DEX, just from your perspective.
I think Kyle nailed it, but I would just reiterate the fact that the primary risk with really any bond is the time value of money, right? Like the reason we're giving you a discount is because you have to wait for your money. So you just have to be really confident that the price is going to be roughly in that range or higher. Certainly down the line, especially with the potential for much longer term bonds, 6 months, 1 year plus, you have to be much more concerned about that time value of money. We actually see it with staking derivatives, staked ETH, staked secret. These are trading under 1-to-1, which is normal because you have to actually spend 21 days to get the money back. That's the market pricing the value of those 21 days. So the time component is a big risk, but still, it's worth the discount is generally going to be worth it just because you're avoiding the slippage.
I imagine the risk assessments that you guys are making with bonds is very similar to the risk assessments you're making with the lend product. Like, what sort of collateral are you willing to accept? What sort of risks are associated with these different types of collateral? What are you willing to issue out? And so I'm sure you guys have already been thinking about this as far as like what assets would the treasury want to acquire and give out shade for in return. And so I'm sure there's been some nice collaboration between these different primitives already, talking about the different risk parameters you were talking about, and like what sort of the end goal of what the treasury is going to look like and what we're going to be able to do with the treasury as well. So personally, whenever, and I mentioned this briefly on the Twitter Spaces that you guys hosted earlier today. One of the things that interests me the most about the different primitives that Shade is launching is the role that governance is going to play in shaping like the way that the primitive or application is going to be functioning, and like what decisions are going to be made for it down the line. And so obviously right now, the team is making most of these decisions. You guys have been doing a phenomenal job at getting community feedback. And I think a great example of that is you guys are now considering multiple different bond models due to community members speaking up and saying, hey, we've seen really good success with some of these other models. Can we at least entertain this idea and let's talk about it? And so that's one of the beautiful things I think governance is also going to help promote for Shade, is this constant dialogue amongst members about how can we make things better? How can we make things more efficient? how can we focus on end user security and safety more? And so I was just curious if you guys could touch on like some of the things you see governance playing a role in shaping. So I think one easy one would be like, what assets are we willing to acquire and give out shade for? But I think there are a bunch of other decisions that are going to be made down the line and potentially changed by the voice of governance.
Yeah, I'll do like a brief little 30-second blip and then hand it off to Kyle to specifically talk about what maybe that could look like with bonds. But fundamentally, the tension you face in governance is the ability for a subset of actors to move rapidly with daily operations to help grow the protocol versus the need to go through decentralized governance, right? Like if let's say we had to get 6 billion people to agree to sending 10 secret from wallet A to wallet B, like that's a problem, right? Like that's too slow. On the other hand, if it's one person can send the entire shade treasury from wallet A to wallet B, that's a problem, right? So we have to be able to like find this balance where there's subsets of actors that have been empowered by the community via decentralized governance, literally like their wallets are part of something that's empowered to take a certain subset of actions. And then there has to be accountability between those different subsets of people, just like a government, right? Like we're essentially just this is that, it's governance. So that's what I'll tee off here, and Kyle will talk about assemblies and bonds, but like I think like as a community we have to be cognizant of the tension between the two and the advantages of centralization of subset of people and the risks tied to them, and we have to collectively come to a really good system of checks and balances that optimizes for growth while making sure that ultimately decentralized token holders are the ones that run this protocol entirely and completely. I was in a situation, I think it was like 2 years ago or a year and a half ago, where there was a DAO. I just remember seeing their Discord. It was like, this is the policy, this is what we did. And it was like, wait a second, like where's my voice, right? Like where's my actual like impact on who those people are and their ability to like just go and make that action. And that's what kind of inspired what Kyle will now talk about now with governance.
Yeah, I think what Carter was saying is super spot on. It's how do you balance action with accountability, right? So that group of users, however large they are, can actually take beneficial actions with it for the sake of the protocol. We're definitely not, I should say, we're very aware that bonds is a very powerful tool. And so just right away, as soon as development was starting on it, and as we looked at other examples of bonds, and we were trying to decide on how like admin privileges or super user privileges should work for it, we knew that there were several stopgaps we had to have in place. And a bit of the architecture we have right now is the idea of two different governance assemblies. And so one is like the super users, they are the limit admins, and they are the ones that set like the global parameters for the bonds contract. It's like, what is the total amount that can be issued? What is like the bare like minimum price that we will allow bonds to even be opened at, like that shade is currently being offered at, just to prevent price attacks in that way, right? So it's putting in a floor.
And super admin is like token holders determine.
Yeah.
Just to clarify, the super admins are like only the baseline token holders are
yes.
determining these parameters. Yeah.
Absolutely, yeah. We're not trying to hold any specific special privileges with us, just to make that clear. Like this is still a governance assembly. It's all still within the framework of governance and the token holders having the say. It's just a way for these groups, these assemblies of token holders that have governance privileges to have accountability for each other. But so while then this limit admin assembly provides these outer boundaries that bond opportunities can be instantiated within, then a bonds assembly itself that has the people that are actually looking at what assets should we be trying to secure for the DAO, what assets should we be offering from the DAO, what are the risk profiles we're going to offer them at, the vesting periods, the importance of that Sbeem touched upon, right? Like that's what the bonds assembly is going to be monitoring. They're going to be the experts on it, the subject matter experts. And so then within those outer bounds set by the limit assembly, they have freedom. They can instantiate bond opportunities that should benefit the DAO. And with each of those opportunities too, just in regards to safety and security, right, to try to prevent the tool from being abused. There, again, are floors on the issued asset to make sure that the price is not being attacked and it's not just getting taken advantage of. Also, it's putting in ceilings on whatever the accepted collateral assets are. Nobody wants to see a case where you open up a bond of Shade for SETH, and then suddenly there's like an Oracle attack on SETH, and then the price is skyrocketing, and everybody's panicking about it, and the protocol gets abused as a result. And so that bonds assembly will be able to put in ceilings on each of those prices. And so far, yeah, all of the checks for making sure that issuance limits and things like that, that has been a concern from day one, and we're confident that that will be solid going forward.
I think it's pretty awesome, and Kyle took firsthand leadership on coming up with a lot of these boundaries. And so it's like you have your global parameters that decentralized token holders instantiate, and then the bonds assembly essentially can't get outside of those different boundaries that are set. It has to be collective governance expanding those boundaries, and then they have a subset of actions they can take. And then even then with governance, with what Guy is building out, there'll even be like sanity checks on their everyday operations. Like that's like the angle that there's like still like a super, super low quorum vote, but something that still says we have an on-chain record that you chose to make this action, and that like baseline token holders still got to like approve or deny the different like small actions. So it's like, it's very, very parameterized. And I think Kyle did like a phenomenal job with sitting down and thinking about it. And it's very safe. We were pretty brutal with like what pretty much you have to assume that bonds assembly is going to abuse the issuance. You have to assume they literally just want to like issue a bond and say that, hey, my Bitcoin's actually worth $200,000. Like what happens if like it's way wonky compared to the market, or Shade is worth $0 and I issue it at that price? Like you have to think about the bonds assembly as the attack vector, as the worst actor in the game. That's really weird because you want to be able to trust those people, but you have to assume that they're going to like rug everyone.
Right.
So
yeah. I mean, even down to what is the maximum discount that can get applied, right? Like that's a parameter that limit assembly sets, so that the bonds assembly can't just like say, hey, here's a discount at 100% discount. Yeah. It's like we're trying to keep it from being abused because we understand that like it's a very powerful product, and we want the users to feel safe with using it. And another example of that is seeing as these bond opportunities are going to be funded by the Treasury, right? Assets from the Treasury will be put up behind it, or the Treasury will be minting. We'd really like users to be able to buy an opportunity, and as soon as the vesting period is up, any time in the future that they come back to that bond opportunity to claim, their funds will be there. The Treasury, the DAO is going to be a very powerful tool. It's going to be doing a lot of things. And so part of making sure that, the Treasury with all these moving pieces doesn't accidentally move all of its collateral that's back in the bond contract to another place is like making sure that the user's funds are there. And they're solely there for that user at any time. So as soon as that vesting is up, they could wait months, they could wait a year, they could wait 5 years. It's like, and their funds are still there for them to come back and collect. And they're the only ones who can touch those funds. They're not going to get reallocated to some other thing. They're not going to get decayed. It's just there for the user. And so that kind of
philosophy. Protect the user. Assume that trusted actors are not trusted at all. And so
I was going to say the prioritization of end user security and safety that you guys have when you're thinking about how you're going to develop these application primitives is really encouraging for me as a community member, because I know that whenever I go and interact with these applications, that the people who made them had my best interest at heart. And I also will say I love the idea of the sanity checks with governance. And I've had the good fortune to talk to Guy Garcia about some of the capabilities of these different assemblies, and how flexible and modular they are. And I agree. I think governance, especially with the way Shade Protocol is designed, is going to be really powerful, not only for bonds but other primitives as well.
I want to briefly jump here and say like this idea of like the security of users first and foremost. I give a lot of credit to Sbeem. Like one of the quotes he has is like, we're like you have to treat DeFi primitives like they're like financial nukes, right? And like that's the degree of like carefulness we have to have, because these are user funds. This could be hundreds of millions of dollars, billions of dollars. And so I think his impact on the developer culture internally has been I think we're continuing the levity continues to grow over time, and it's really great to have people like Kyle and Sbeem within like the dev community continue to push for that level of importance, because the product people are always like, go, 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 anything's possible, but it has to be tempered by this very grounded, rooted pessimism in everything that we're building, from the economic side, from the threat actor side, all of it. So, yeah.
Yeah, and just like a quick little plug here, for anyone listening that might be concerned about their voice not being potentially heard as well within like some of these different assemblies and where everything is. I personally think, and I know the Shade Core team thinks it's really important for the community to be able to communicate new ideas, share due diligence, be able to share constructive criticism. And I personally think the Shade forums is a perfect place for any community member to be able to make their voice heard in a more, not professional, but like in a more serious setting. Like if you have some really strong ideas about something that's being talked about on the forums, then that is the perfect place to go and make your voice heard. It's much easier to have your voice heard there than, potentially like if you only have a small amount of shade, right? And you're wanting to vote on something in governance, your voice might not mean as much relative to the other people. But if you really just want to make sure your ideas are heard, being able to go and share these things on the forums is a fantastic opportunity for anyone wanting to participate in the discussion of any of these primitives. So speaking of, and kind of along those lines, I want to briefly touch on the two models that are currently kind of being proposed for how Shade Protocol handles bond issuance. And currently there is a forum post talking about this. Shade Protocol did a Twitter Spaces today kind of presenting the two models. We're not going to go into a whole bunch of detail because you can go and listen to that recording if you want to get like a really good in-depth idea of, the heart of these two models. But would you, Carter or Kyle, be able to just talk about very briefly like what the two models are and what their key differences are?
Sure. So there's two models. The first model is what we're calling the bird model, which is user comes in with a single asset. Let's say it's Atom. They deposit it to the DAO, and in return, they receive some other asset like Shade at the end of it. So that's model one. Model two, which is called the Waffle model, as inspired by community member Waffle. It's also kind of the original Ohm model that Olympus DAO used, is where a user comes in and instead of offering a single asset like Atom or Secret, they instead deposit an LP token that consists of 50% Shade and 50% other asset, or whatever their asset ratio is, right, in the form of an LP token that gets deposited into the DAO. And this has ended up being like a really fascinating kind of economic discussion, because like there's a behavioral finance impact on using hey, in order for me to get the bond, I have to buy Shade, make the LP token and deposit, versus like just depositing one asset and getting Shade out. Like there's a behavioral finance difference, but then there's actual like economic efficiency where if you're using the Waffle model, there's like the DAO is kind of buying Shade back off the open market with its own Shade, which ends up having like this very minute 2 to 3% like deficiency. It depends on the discount. So yeah, those are the two models, and there's advantages to both relative to circulating supply and the ability to utilize the treasury. And what we're finding is there's like some philosophical differences in like how the protocol should view inflation and how the protocol should view its treasury assets. And how freaking cool is that as a community that these discussions start to like really laser in on some of these things that fast just by having like a very intensive open public forum on these things. And I'd love for Sbeem to come in here too, and like I think he had comments on the forum that were fascinating about the philosophy of taking an asset that doesn't necessarily have to be used for liquidity versus the Waffle model having to be used for liquidity. I'd love for Sbeem to hop in here and kind of maybe offer up his thoughts, because he wasn't on the Twitter space, and like we won't briefly get into debate, just kind of get a summarization of his thoughts, and then we can continue to move on.
Happy to entertain the debate on the forums. My strong opinions are weakly held, so I'm easy to change my mind. But yeah, so the point I was making is just that when we issue a bond, we are taking a position on shade in some way. We say we have shade in our treasury and we want to get rid of it. And instead, we want this other thing that you're going to give us, whether that be LP tokens, whether that be secret, Atom, etc. And of course, the same is true if we issue bonds for anything else. If we sell Silk, if we sell Atom out of the treasury, whatever. It's just like anyone else who holds a token sells it for something else. There's a reason you sell it. There's a reason you buy something else. And in particular, with the case of LP, we actually have a really interesting problem where we have to bootstrap DEX liquidity, but also by taking on LP tokens, what an LP token fundamentally is a delta neutral position of those two tokens. So when you say, yes, I want to put my money into Shade Bitcoin LP, what you should be thinking is, I expect the price of Shade and Bitcoin to be at this ratio pretty much forever, or as for a long enough time that the fees I make from the LP offset any price movements. So just again, it's one of those risks that's specific to those assets, and us as a protocol. When we're talking about what things that we want to accept as collateral, we have to consider things like, do we want to take a delta neutral on this particular LP that we're considering? Are we willing to sell this much Shade? I could go on for a while, but I'll leave it at there. If you want more information, go read my thread posts. Yeah.
I'll jump in here too, because I think it's an offer, like one interesting thought experiment. So when we think about impermanence loss, we're always thinking about it in terms of like a collective value, like US dollars, right? Now, if you remove US dollars from the equation and all you think about is nominal token amounts on both sides, and assume your number one goal is to purely increase your nominal token amounts collectively over time, what is loss, right? If you take the dollar out of the equation. And that's how so that's the jump I'm making with bonds, is like, remove kind of this dollar overhead of like, well, you could have been more efficient if you didn't do this. And if instead all you say is, I want to increase the nominal depth of liquidity in relation to token amounts, then, over time, you're growing the depth of liquidity in a way that you're happy with. Now, the challenge here is you have to be really happy with both sides of the token. You have to really believe in both assets and believe that the market will care about both of those assets into perpetuity. And that's where, like, technically dollars as an overhead for conceptualizing these situations becomes a helpful tool. But I offer that up there because it's a type of thought experiment I've had like a couple debates in office about it. And it's just like another fascinating lens to think about if you remove dollars from the equation of loss.
Oh, yeah. I
growth?
have this internal debate all the time of like, it's not a loss until you sell it. So as long as my token amount is increasing, I'm happy.
The opportunity cost would disagree with us, but we're not trying to be a hedge fund, right? Yeah. So it's like, what are we trying to deepen? We're trying to improve the service of people trading across nominal tokens, right? In relation to the dollar, maybe not like that. I don't know. Yeah. Preferably Silk, right, is our mindset. But it's anyways. I'll end it there. I thought it's really interesting to kind of toss out that little thought experiment, because I might make a forum post as well of just kind of iterating that thought process. And I know there's holes in it, but it depends on your time horizon and like what you're benchmarking loss in relation to. And once again, these are like, like, what do you mean? You could benchmark loss not in relation to the dollar? It's like, yes, you could. You could have different benchmarks, different goals. But
I think for the Shade team, I think it's a little bit more natural to try and not think in US dollars, as we're trying to get Silk to be that thing that we get to pay everything in and the thing that preserves our wealth and purchasing power. So ideally, in a few years, I don't have to think about US dollars other than to pay my taxes. But, we still got a few years till we get to there.
It's one of my biggest complaints with DEXs is that, that like liquidity chart where it like drops off a cliff during a bear. The amount of nominal tokens might not have changed, purely the value of them. And so it's like your trading experience isn't actually worse within token amounts. It's purely within the collective underlying value. And so that stuff, like, I'm hoping with our DEX, with our charts, that it's not like dollars don't tell the whole story of liquidity. Let's put it that way. And I think dexes have within like summary of data of like, oh, like I said, liquidity dropped off a cliff. It's like no liquidity might have been removed at all from the dex. You might have lost nothing, just only the value of the assets that are being provided. So anyways, fun rant, just got a little tangential there.
So you briefly touched on it just a moment ago, and I believe it was Moon Royalty that spoke on it in the Twitter Spaces. But after really listening to the discourse surrounding the different bond models, I'm realizing that there's a real conversation to be had and philosophical points on both sides of the aisle about what the role of the Treasury actually is and what can be done with it. Like, obviously when you have a decentralized ecosystem, you're going to have a lot of people coming together and, people not necessarily seeing eye to eye, people having different ideas coming from different ecosystems. Like I know Sbeem came from, was it Avalanche, if I'm not mistaken?
Yep.
So like people coming from different ecosystems that see other things succeed well, different communities that and the way communities react to things. So one of the things I've been thinking about a lot this afternoon, this evening, leading up to this is like, what do I think the role of the Treasury is, and the shade that it currently holds? Like, what are the best use cases for this? And kind of associated with that, what timeline should the Treasury operate on? Obviously, especially as we're focusing on end user security and safety, we have this idea that Shade Protocol is going to be here in 10, 15, 20 years, right? So should we as community members also view the timeline of, the Treasury and, the time horizon that its operations kind of work on? Do we also view it on that same time horizon, or do we have to kind of break it up? And I think the two different models that were proposed kind of talk about different time periods, like what could be done to help bootstrap liquidity the fastest, once bonds are issued and once Shade Swap is ready to go and live. And then you have something else that maybe puts more emphasis on maintaining the value of your treasury, like maintaining the shade tokens within your treasury and taking a slightly slower approach to building that protocol owned liquidity. So anyway, it's just
I think you make a phenomenal point, and like it's something that like I've thought about with relation to kind of like you only bootstrap once, right? And so there's advantages to like putting more chips on the table at the same time, because it's more likely to create a network effect that draws users, draws liquidity, draws capital that then turns into what we call momentum, right? At the same time, if you do the bootstrap wrong, you put those chips on too aggressively. If you didn't value your chips that you put on the table properly, you undervalued them, and what you got in return wasn't as good as what it could have been if you would have waited and slowed it over the course of 5 years, right? So I think you bring up a phenomenal point of like, what is the time horizon for bootstrapping? How do we evaluate shade? Maybe we should never issue a bond unless shade's over $30, $40. Oh, we're back to US dollars. Maybe it's about the ratio of it to Atom, to Bitcoin. And so these conversations there's so much nuance here, so much like beautiful depth to them. And I would love to spin up a forum thread on that too. That's a fascinating one. Because we're approaching the necessity to make a decision on that type of philosophy. We have a couple months, and the thing with emissions is you don't get to rewind them. So,
yep. So, how do you guys envision bonds playing like a bigger role within this ecosystem of interconnected decentralized applications within Shade Protocol? Like I know. In my last conversation with Sbeem talking about Shade Land, there are potential opportunities to see bonds value being unlocked quicker than, let's say, the lockup period requires. And so that just got me thinking about what are some of the other DeFi opportunities you see bonds playing a role in.
I can touch on the Lend thing real quick. So that's kind of like a mid to late game kind of thing. The high level idea of lend is that anything that is tokenized can be accepted as collateral if the protocol chooses to accept it as collateral. So at launch, bonds won't be tokenized. So at launch, we won't be able to accept those bonds as collateral. But it's very easy to imagine a world where we issue tokens for they probably be NFTs, not SNP20s, but regardless, they'd be these tokens for a 1-year lockup period or a 30-year lockup period. I mean, there's 30-year treasury bonds, right, in the US. And so the question is, here's this asset that has some present value based on those discounted cash flows up to the expiration time, and that can make good collateral. What if it's a 10-year USDC bond or a 10-year Silk bond? I mean, that has a very stable known value. We're willing to accept it as collateral, and hey, you don't have to wait 10 years to realize that value. You can keep the bond and borrow against it, and we're fine taking that as collateral, and you're fine taking that risk. There's no reason why that can't be a thing.
That's awesome. I don't know why I didn't think about these longer time horizons, but in my mind, I'm thinking a lockup period of 14 to 21 days. But now that you mention it, you're 100% correct. There are 30-year bonds, 15, 10, 5-year bonds. So why couldn't we do that for Silk or Shade as well? Especially if we know something like Silk bond is going to be very stable, or it's got a historical precedence that shows that it's been stable over X amount of time. So that's really cool. But yeah, Carter, do you, just off the top of your head, do you see or do you think bonds will play an important role in any of the other DeFi applications you guys are considering building or that are currently in the pipeline?
Yeah, I mean, I think Sbeem brought up an incredible V2 of what bonds could look like, and that's honestly the first time I've ever heard that idea. So that's that's sick. So V1 of bonds is very much what it means for the treasury to acquire uncorrelated assets in a way that users win, to Kyle's point, and the protocol wins at the same. When I think of the interactions between the different Shade apps, it's more about having a UI UX experience that has never been done before, because when has a lend product and a DEX product and the bond product all been able to live together in the same unified experience with, and this is the key part, the same aligned incentives, right? Like Olympus DAO, they make the user go to Uniswap, mint the LP token there, and then come back to them, and then versus us, it's all going to live in this beautiful little cohesive experience where you mint out an LP token on the DEX, and it's going to be oh, there's a bond opportunity. You want to take this? It's right here. It's right in front of you. We're making it easy. So that's the stuff that gets me excited, is about the unique relationships in our UI UX that you couldn't pull off elsewhere because of diverging incentives and diverging teams, and what that does to empower the products to be more usable and more adopted. And on the utility front, that's more up to our imagination. That's up to the V2s like Sbeem is ideating on, and how that can interact with the other products. So that's how I would differentiate the concept. And Kyle, maybe if you have anything you want to jump in on.
Not in particular. I think you hit it out of the park in regards to just that user experience, right? And of course, again, it's the treasury getting those uncorrelated assets, absolutely, and then user experience. And for bonds V1, those are the pillars of it.
Yep.
Yeah, I'm really happy you brought that up, just because I imagine that this will be the next thing that we start seeing getting built out on Shade Protocol's landing page. So we'll have the staking.
Big overhaul coming with the launch of bonds. Y'all are about to see the master UI UX that everything else is going to plug into from here on out. So it's the future is arriving very soon for UI UX, and we're pumped about it.
Hell yeah! But also the ability for users to see how could I potentially acquire Shade, and I can look at all of these different applications, see what would work best with the current market conditions, because there are probably going to be times where it might be better to just buy Shade off of a DEX instead of going through bonds. And so giving users the ability to very seamlessly interact with all of these different applications all within this same place is going to be really powerful, not only for Shade, like retaining users on their site and making sure users have access to everything that Shade has to offer, but also just from like an ease of use and all, like your product is going to get used the way you want it to be used because everyone can find everything in the same place. Like I can't think of how many times that I personally struggle to go find a project's application page. I got to go to their Twitter and then I got to go find this and that. And it's like for anyone that wants to interact with anything Shade, being able to go to this one place and access everything is going to be really, really nice.
Yeah, and ShadeProtocol.io is going to be the app, by the way. So that's like, I feel like a lot of places it's like landing page and then use app. Here it's like you're in app and the landing page is already like integrated into the user experience. Like we don't want people having to make multiple clips. It's like you're there, you've arrived, congratulations. That's just a small little quirk of like stuff that I feel like DeFi, like it'd be a layup. Like why are we making people go to landing pages and then enter the app? Just like bring them to the app immediately. Have the information similar to a landing page, but they're already in the app experience. There's no like having to jump to a new web page. Anyway, small philosophical things that I think our team, the UI UX team, has just been kind of brutal with themselves in terms of like pushing the envelope and being extremely hypercritical of all the existing products. And I can't wait for the community to get their hands on it because there's A/B testing to be done. There are situations where we don't have the answer to it, and we need the community to come in and be like, I don't like this. Like this doesn't make sense to me. And then we also need to have the presence of mind to know, hey, you're a really strong power user. Like you're so far off the deep end, but this has to work for grandma. Maybe we don't want this to work for grandma. And so then you're considering like the users that we're optimizing the experience for. And so TLDR, the time is coming very rapidly where the community is going to be able to see the UI UX, give feedback on the UI UX, and I'm excited for the protocol team to partner with the community in a very intimate way that we haven't necessarily had the opportunity to yet, because there hasn't been enough functionality to kind of necessitate that type of interaction between team and community. So it's gonna be fun.
Yeah, I know I got to play around with the testing of the airdrop claim, which was really nice. Getting to kind of see the process of what what this user testing and user experience testing is like. And I think at the beginning of this, you had mentioned that that the code for Shade Bonds is currently under audit, if I'm not mistaken.
Correct. By Certic. Yep.
Sweet. So what is the timeline, or not necessarily timeline? What are the next steps after the audit is complete? Is that like after the audit, is that when we go into user testing, like testnet stuff, or?
Yeah, it's down to the front end guys at that point. It's like contracts are done, hands are off keyboard, code hash is frozen for that contract, and it's just up to the UI UX team to literally make it all visible. The cool part with when bonds launch, there is a couple things that have to happen because it's the updated airdrop, it is bonds, and it's also staking derivatives are all being migrated to this new master user interface. So to my knowledge, bonds are coming along on UI UX, speeding along just fine. Targets definitely originally was early July. I think end of July is still very tenable. It will be contingent upon the feedback from the audit. But there's a chance that contracts, which traditionally are the holdup, won't be the holdup, and then it'll just be kind of the UI UX team that we're more waiting on. But either way, I'm optimistic for end of July. Maybe it's a little too optimistic, but we're pushing hard for it. We're pushing hard for end of July. And then we also SilkPay stuff too. Can't wait to have a conversation about that because so cool.
Yeah.
And actually Kyle is now shifting over to SilkPay. So he's got his hand. Yep.
It's hard to say I'm most bullish on any particular primitive, but personally I'm most excited for SilkPay because I can finally start ditching a lot of my traditional finance stuff. I can just start using Silk to pay people. And pay for things, which I personally
get this. Imagine IBC integration with SilkPay. So then you can have your safe send, your safe receive, your requests, reoccurring payments, the whole suite. all multi-chain, all through SilkPay.
So like other IBC assets being able to be used within SilkPay?
Mm-hmm.
Oh, shit.
And then those contracts become this safe router for making sure asset makes it from A to B in a much safer way than Kepler's blind direct transfer. And like you can make a request from Secret Network to grab funds from someone's address on like Cosmos or Juno, and I can make fund requests or reoccurring payments multi-chain. Like this is literally going to be a payment solution. And the thing is, this is really only possible Secret Network's tech because of the sensitivity of some of the messages and the information in the message. So this is going to be. I'm stoked about this because I think people are just going to be like, operationally, businesses will want to use this. VCs will want to use this. Everyday folks will want to use this. This is straight utility. Why is Shade Protocol focused on stuff like SilkPay? It brings users to the platform, and it makes the cryptocurrencies more usable and more attractive. So super pumped about that. And you're going to have to bring Kyle on together for SilkPay too, and actually probably potentially pull Steven too.
Sure.
Yeah.
That was the I think the perfect alpha to end this episode on. This has been a phenomenal conversation talking about bonds, just like kind of the overview of what the purpose of bonds are and some of the flexibility that the Shade bonds in specific are going to be able to have. Talking a little bit about governance as well, but this was really good, and I'm very excited for Shade bonds to launch and to see this new UI UX, and also to unlock my next part of my airdrop. Yeah, if you guys didn't catch that, another 10% unlocked with this airdrop. So, or with the Shade bonds being launched. So that's phenomenal to hear. I'm sure it's going to make a lot of people happy to see some more Shade popping up in their wallet.
There's been so many people building, and I think one of the things we've heard, which is sometimes unnerving, is like, oh, like Shade Protocol team, they're not shipping fast enough, or they're not shipping. And I firmly believe this next 5 months is the community and the world, and anyone that's been doubting the ability to ship, realizing, holy smokes, these guys have been focused on product. They've been heads down building. This team is the real deal. Before they kind of talked the talk, and they were saying stuff that like, this all sounds right. This all sounds futuristic. Now it's time to ship, and it's an unbelievably exciting time, and it's made possible by the really hard work ethic of people like Kyle, people like Sbeem, and all the other developers. So super pumped to get this stuff to the community.
That's phenomenal to hear. That's a great way to end it. Thank you, Kyle, Carter, and Sbeem for joining us today to talk about Shade bonds. For anyone that's still listening, make sure to check out Shade Protocol and House of Shade on Twitter. Make sure to go follow our YouTube page and Shade Protocol's YouTube page.
Subscribe. Where's the where they're always like pointing down in the corner? Subscribe.
And then also definitely go check out the Shade forums. There's a lot of phenomenal discussion going on there, and you're kind of able to get a glimpse on like these primitives and these different ideas being built kind of right in front of you with these discussions. So I highly recommend going and checking those out and participating if you want to do so. But anyways, thank you guys, and until next time, see you.
Hey everybody, thanks for listening, and thank you to the Shade team for joining us on the House of Shade podcast. Make sure to check out the links in the description below to learn more about Shade bonds and everything they're working on over at Shade Protocol. And please help support the House of Shade in our mission by liking the video and hitting that subscribe button. Thanks, and see you all next time.